Okay, guys, welcome to another weekly market review video. Let's get straight into it. Okay, so this is a disclaimer. Again, it's not financial advice. Any views, opinions, references, or assertions we may make out is just our own personal views and not held by any other group. Okay, so let's get straight into it. The charts, which is the most important things, and see how do we attack the markets for the upcoming week. Okay, guys, so you can see last week what happened for us. The markets were good and in our favor. They were bullish. I've been saying for a long time that for the midterm, I believe the markets are bullish. They will keep going up. And true enough, on Wednesday, it broke out. Okay, so you can see I've drawn a lovely triangle over here. Markets did break out. They broke out over here. Yeah, I think it's fantastic. Market broke out and we went up even higher for the markets. Okay, so really fantastic that what the markets did. But okay, moving forward as we come to the end of May and we go into the start of June, I will turn neutral a little bit. Okay, I will turn neutral when it comes to the markets. Okay, so why am I becoming a little bit more neutral? Okay, let's firstly take a look at the seasonality, guys. Okay, the seasonality. So let me clear this off. Okay, so let's look at the seasonality. So if we go to the seasonality and you can see the S&P 500, typically, guys, if you look over here for the month of June, I would say the month of June is a month of pullbacks. Okay, a month of pullbacks. So you can see over here, for the month of June is usually a month of pullbacks. It can go up, can go down, it can go up, can go down. Okay, but do remember this year is not like any other year. Normally for the month of May, we were supposed to actually drop. But if you look at it for the month of May, we actually went sideways for the market, and eventually it did break out and go up. Okay, and normally when it goes up, it's supposed to happen in the last week of May, but it has already rose significantly last week. Okay, so for the month of June, it's usually a month of pullbacks for the markets. Okay, so if again we look at it as usual, as I've been saying, markets have been going in this sort of range, and finally we had a breakout to the upside. Okay, so for the short term or for the midterm, I will be a little bit more neutral when it comes to the market because number one, June is a month of pullbacks. Okay, now why did firstly the markets actually break out? Okay, why did the markets break out exactly? So let me show you guys. Right, for the SPY, you can see that we have actually been going in this range for a little while. Just go up, down, up, down, up, down, and then finally we broke up for ourselves. Okay, now why did we actually break out? The answer is very simple. Okay, it's very simple. Firstly, if I turn on all my MAs, okay, you can see my 50, my 100, my 200. I've been saying for a while, you can see that my 50, 100, and 200, they are in this order. Okay, they are in this descending order for the chart. And typically, they are all upwards. It is signaling a bullish trend and a bullish uptrend. And again, if we look back to the times when markets were going up and it was bullish, you can see over here, markets were the same as well. Okay, 50, 100, and 200. So again, right now for the midterm, why did markets actually push up and why did it go up? Because you can see my 50, 100, 200, we are in a very clear uptrend and we went up even higher. Okay, but for the short term, like I mentioned, I'm going to be more neutral. Okay, so why am I going to be more neutral? If we go on my daily, okay, if we go on my daily chart, okay, we go on my daily chart, number one, you can see a very clear wave or uptrend that has been happening. So let me draw it out for you, all of you, so you can see. So you can see we started over here, we went up, we made a new high, we pulled back, we went up, we made a new high, we pulled back, and now we are on our final move up and making a new high. So you can see for each time that we've gone up, okay, over here, and now even here as we go up a little bit more, we are making new highs for ourselves. Okay. And why am I becoming more neutral? Is because we are making or already at new highs and we are hitting certain key levels. Okay. We are hitting certain key levels for the SPY. Okay. So let me show you what I mean. So if I take my FIBO, okay, my FIBO, and I connect, okay, okay. And if I connect, you can see that we are already heading towards my highest point, which is at number 1, which is at around 424. So do expect, okay, from around 420, when market went up to at least about 420 last week, which is around here. When market went up to about 420, we have already experienced some pullback and some choppiness in the market. Okay, so market, I believe for now, since it's already hit new highs, okay, new highs for itself in this wave, okay, since it's having new highs from this previous wave, I believe whenever it hits the 420 now, do expect some choppiness and maybe it might move sideways. Okay, so it might move sideways. Sorry. It might move sideways and maybe go a little bit up, a little bit down, but it may go sideways for the time being. Okay, markets are a little bit overextended now, so I will be a little bit more neutral. Okay, because it is coming to the end of my FIBO level. Okay, typically markets hit a high at the number 1 level of my FIBO, which is currently about 424. So from 420 to 424, I will expect that this is the highest end for it to start having some choppiness. Okay, and it has again done higher highs. Okay, it's done higher highs. So if you can see very, very clearly, it's done higher highs. We can see over here, it did a higher high. This high was higher than the previous one. Okay, and now over here, we are going to be higher than here. Okay, so markets is doing higher highs for itself in this wave pattern. Okay, now, number 1, we have it being overextended. Okay, now the next thing to look at is that I believe our tech stocks, okay, our NASDAQ, our QQ, our tech stocks are even more overextended. And because most of us trade the tech stocks, because they have a lot more meat, a lot more movement when they move, again, I believe it is overextended. And again, we are due for some choppiness or even a healthy retracement. Okay, so again, if you take a look at the fear and greed index, everybody, fear and greed index, you can see markets have been going up last week, and now we are officially at greed levels for the market. Okay, so we're officially at greed levels. It is greedy. This is not a time where I want to be taking or going in very heavily into long positions. I want to be a bit more neutral in my view of the market. Maybe expect a slight pullback or retracement when it comes to the market. Okay, now again, if we take a look at the NASDAQ, guys, okay, before we go to the NASDAQ, let me show you Google. Okay, I think Google had a significant breakout as well. And when we look at Google, okay, if we look at Google, you can see that there's a very nice triangle that happened. And in the end, Google broke out for it and it flew up significantly. Okay, it flew up significantly for Google. The stock really just flew to the moon. Okay, now I believe really looking at Google, it is too overextended. Not only Google, but our other tech stocks, and it does need to at least go choppy or pull back for the short term. Now, why is this the case? If I take a look at the NASDAQ, our QQQ, okay, number 1, if I turn on my RSI, okay, so I turn on my RSI and I have a look at what's happening, you can see very, very clearly what's going on. Okay, right now, where the NASDAQ is, okay, the RSI is overbought. Okay, hold on, give me a minute, guys. Okay, right. So if you can see, my NASDAQ, the RSI is overbought, okay? And right now, the same thing has happened, okay? And when the NASDAQ was overbought previously, we can see that there was a pullback for the markets, okay? The pullback for our QQQ in particular, the NASDAQ 100. And right now, we are seeing the same thing that happened earlier on, and I believe this was around February this year. Okay, and typically when the RSI gets high or to overbought levels, close to overbought levels like this, it does go down. So you can see previously over here, when markets were overbought, we did experience a move down as well. Okay, so if I'm taking reference to the latest movement in February, again, I would expect a little bit of shock and a little bit of pullback from the market. Now, I don't expect it to crash or go down drastically, okay? Because why? We are still in a wave pattern. Okay, we are still in our wave pattern. Now, why do I say that? If I draw very nicely for you guys, we are up, we went down, we made higher highs and we went up, we went down, and now the market is making higher highs as well. Okay, so we are still in our wave pattern. We are still moving up significantly. But again, if I'm referencing where RSI has been for the previous months in February, again, we are now at overbought levels and we are due a pullback. So if the same thing is going to happen and the market does pull back, if we take a look at the pullback, guys, when market did pull back, it was about a 9% drop. Okay, it was about a 9% drop with the QQQ. But as you guys know, when markets drop about 9%, your individual stocks can drop a lot more. Okay, your individual stocks can drop a lot more when it comes to their prices. Okay, so again, if let's say market also does drop about that same amount, okay, about 7 to 9%, then your individual stocks will drop a lot more. So that is why for the midterm, or at least, sorry, the short term, I will be a little bit more neutral, maybe expecting a slight pullback in the markets. And this is healthy, okay, because for it to continue up longer, market does not go up in one straight line. It actually goes up in a wave. Okay, it goes up in a wave. It does not go up in one straight line. Now, if I draw my FIBO, okay, if I draw my FIBO for all of you, I think you will be able to see very clearly. Okay. Okay. Right. So if you draw my FIBO, guys, you can see very, very clearly that markets have already hit, for the NASDAQ, we have already hit my level 1. Okay, we have already hit my level 1, which is around 338. Okay, around 338. We've already hit that. And typically, again, when markets hit your level 1, it will, that is the highest, and we can expect a pullback. So market is already overextended. This NASDAQ is already overextended. It's already hit my 338. And what I would constitute as a healthy retracement, okay, what I will constitute as a healthy retracement is that if it does chop and go sideways, if it does drop, a healthy retracement would be to my 61.8 or 50 level. Okay, so 61.8 or 50 level. So that is around 311 to 318. Okay, that's where I will expect a healthy pullback for the markets and for the NASDAQ. Okay, for the NASDAQ when that happens. And I would hope that does happen, because then stocks will not be overextended. They will be moving in a nice uptrend with proper pullbacks. Okay, so again, I will be a little bit more neutral. I am hoping that there is a slight pullback, and if it does, a healthy retracement is to these levels. Okay, so take note of these levels, guys. 311 to 318. That is a healthy retracement level. Okay, now again, it's not just this, but there are other factors as well that's showing it. If we go on Finviz, okay, so Finviz, very famous site. I think everybody knows this. And we go to the map over here. If I take a look, everybody, at the year-to-date performance, okay, the year-to-date performance on what's happening in the markets, you can see so far year-to-date, what has actually rallied the most, it is actually our tech stocks. You can see the ones in green, my Microsoft, my Apple, my Google, my Meta, my Nvidia, Amazon, Tesla. These are the ones that have been rallying and been pulling the market. It is very, very obvious that this rally is being led by the tech stocks. Okay, and we can even take it one step further, everybody. Let's go to the ETF, my exchange traded fund. You can see QQQ, just look at QQQ, everybody, as up 26-27% year to date, everybody. Okay, year to date it's up, and your Dow Jones is not even or barely up, right? Literally just about less than 1%, and SPY is up slightly, about 8-9% healthily as well. Okay, so again, it's very obvious that this rally is being led by your big tech stocks, and it's something to notice about. Okay, so Nasdaq is overbought, and again, it's going to be moving sideways for itself for a little bit, and expect a little bit of a pullback, and that's going to be healthy. Okay, so again, if you are trading, you are doing options or any type of trading, again, if you want to short a little bit or you want to short this pullback, again, make sure you have or do your proper technical analysis before you take any trades for your portfolio and for your trades when you're doing it in the markets. Okay, so entirely this has been a purely tech rally that's been driven. And I want to show a little bit more about Google. Okay, a little bit more about Google. So if we go into Google, okay, so we go into Google, okay, so you can go and search for Google and in Finbis, and when you go to Google, you can scroll down and you'll see all this news. What is a very important factor I want to talk to you guys is about here, okay? Literally for the month of May, everybody, if you can see, for the month of May, there has been so much of insider selling, okay, so much of insider selling. You can see that this entire rally that's been happening with Google, a lot of insiders, directors, and 10% owners, they have been selling off their shares. Okay, they've been selling off their shares into this rally. So again, don't expect Google to keep going up. Don't expect this rally to keep on continuing. It is overextended. I believe some choppiness sideways or even some pullback will be around the corner for sure. Okay, so again, I believe all of these guys, they know something that is up. They are all purposely selling into this rally. People or retail traders will be thinking it's going to go higher, but I highly, highly doubt that. Okay, do expect some choppiness and some pullbacks for Google and a lot of our other tech stocks. Okay, now, again, key levels that I'll be looking out in the market as well. So again, my S&P, what will I be looking out? Let me just change. So very simply, you can see it broke out of my triangle, went up even higher. What would I be looking out from the markets? Very simply is this level. So on my US 500, around 415, okay, around 415, all right, 414, 415. This is the level that I'm going to be watching out very, very closely, because again, now if it does pull back healthily for itself, I will look for 415 for it to come down and possibly bounce and hold here. I think it may come down and bounce and go a little bit sideways and choppy for itself. So again, price may come down all the way here, and then we may see it go chop and go sideways for a little bit. Okay, now, again, where would I start or maybe do a little bit of shorting for myself when it comes to my portfolio? Very simply, I will look out for this level. Okay, so let me draw it and show you very clearly. Okay, so if let's say prices do continue down, everybody, do continue down, and they break my little triangle, my levels over here, my red line, this is when I will signal on maybe going a little bit more bearish and taking a bit of bearish trades. Okay, but it's just for the short term, I remain neutral. Okay, in the midterm, I'm still bullish on the markets. I believe, again, we are making higher highs and higher lows. Now we are just overextended and a healthy pullback is necessary. Okay, so again, I'll be looking at this, my US 500, looking at the 415 for key levels. And if it breaks below that and this triangle that I have drawn, then I may do a bit of shorting and play a bit of the pullback in the market. Okay, okay, so that's basically how it is, how the charts are. So please don't go and rush in and think of buying stocks now. Please don't go so crazy on bullish trades. The market is overextended. The Nasdaq, especially QQQ, is overextended. Please be careful when you're doing your trading. Okay. Okay, so with that, I come to the end for the charts. But again, as I always tell you guys, despite the volatility in the markets, despite how last week was, okay, there was a major move up. If you manage to capture the major bullishness and the bull moves up, you would have been significantly profitable for yourself. Okay, and that is why it's important to know how to actually read the markets, the proper TA, to do what financial instruments you can actually take advantage of to make good returns in this market. Okay, so let me show you guys, right? We have our community over here, our TWC community, and this week they have absolutely been killing it in the markets. They've been killing it and they made some really good returns for their portfolios. So let me go ahead and share that with you. All right, everybody. So again, take a look at what's happening right now in our community. Literally last week, craziness, man, because the markets exploded out. Some crazy returns that happened. You can see Desmond over here, SMH called 31%. Okay, 31% for himself. Google put day trade being done made about 11% in half an hour. We got Aloysius here making his trades on Apple, on Amazon, fantastic moves. We have Mr. Daniel over here, ACN. Okay, ACN. 2 hour 20 minutes. Guys, this is one of the most incredible ones. Literally that day when this trade was entered, within that night, most of them were exiting with 25% to 26%. It's crazy. And those who held the trade overnight went up as high as 40 or 50%. Okay. I think some of them who really held it all the way made 100%. So that's crazy, guys, right? The kind of trades that were taken last week, the kind of returns that were made because the markets exploded. Crazy, right? Literally AMD by Desmond again making 1K for himself, right? 1K in 10 minutes, right? I think that's incredible. Literally, some people work for a couple of weeks or couple of days and they can't even make $1,000. This guy has done it in 10 minutes. So really fantastic. Okay, and again, we've got my guys Edwin over here, fantastic swing trade those who took. The next day, he exited 30% ROI. Really, really incredible. I got Pris over here taking Netflix day trade and made 12% for herself. Fantastic. Thanks to the trade ideas that was posted. And Keith, again, our latest member, this guy is killing it time and time again. So if you are not part of our free channels and our free what do you call these pages, guys, please go ahead and join them. On my left, we got bit.ly/IWC Discord. This is our free Discord channel where we post weekly market review videos, where we post interesting content and things that can help you out when it comes to your trading. Okay, so if you're not joining yet, please scan the QR code or click on the link for yourself. Now, on the right, we have our Instagram page. This is where we post our spotlight of the week, which is basically a few counters or tickers that we are looking at and the possible levels it could go to. So if you are already a proficient trader and you want some ideas or even trading resources, please follow our page, bit.ly/IWC this Insta, or scan the QR code over here. Okay, and with that, guys, I come to the end of my weekly market review video. Again, please stay safe, take care, bear in mind where the markets are going, and I'll see you next week for another video. Okay, take care, guys.